What's going on, guys? It is Stephen Delisle Properties in Keller Williams. We're doing another deep dive. So what we're going over today is about investing. We work with a lot of investors. We have a lot of investors buy our properties. So the big question is, when should I buy my first house? Well, it's really much more than just that. So the first three questions you really have to ask yourself are really, what's the model I'm gonna choose, the time I'm willing to invest into that, and then the accountability mechanisms in which I'm actually going to execute that goal. So it's not just single family homes. Are we investing into commercial? Are we doing multifamily? Are we doing vacation rentals? There's many different ways that you can invest. So you first have to ask yourself again, what model am I gonna choose? Is it self-taught? Am I gonna get a coach? There's multiple different ways, kind of like golf, if you will. I can teach myself how to golf myself and kind of understand, yes, you swing the club and generally want it to go in that direction. However, if I want to step up my game, I'm going to hire maybe the local club pro and really decide to use really the same amount of time in self-taught as the club pro. So a few times a week, kind of get in there, do the exercises, understand exactly what needs to happen for that ball to go straight. Same thing with investing is, what's my target? What's my end goal result? Do I have the capital to buy a vacation rental? Am I looking for long-term gain and more inventory, if you will, for my portfolio, which would be single family homes? Same thing applies. If I have a single family home, then I can probably manage quite a few of those locally myself. I wouldn't have to hire that out. I have the time to do that. Yet, if I have a vacation rental, the time and expertise to line up everyone, get the inquiries, communicate back with everyone, and if you already have a job, then you're not gonna have the time to be able to take those inquiries and actually make money on your investment to even buy that vacation rental home in the first place. So again, it's really just understanding exactly what am I studying, pick up the model that you will grow into first. So if it's, again, long-term hold, it's gonna be that single family home. And then maybe you grow into the model of multifamily. So it's still same concept, hyper-local in your area, so you don't have to run all over town to be able to pick up checks, and maybe you start leveraging out some of the picking up checks and managing and cleaning when people move in and move out by a property management company. Again, that would be local. Now, I will say that there's never a wrong time to buy a great property if the intention is to hold it long term. If you're trying to do some fix and flips, we can go into that in a different video because it's definitely going to be a more expansive explanation of what return on investment you're going to look for if you're buying a house at $50,000 or $200,000. What's the renovation cost, and then what can you potentially sell it for, and the delta in between for that to be worth your time to be able to make that flip. Now, it's, again, never a bad time to buy that great property, to buy and hold it, and literally let that tenant have a place to live, and you make your $200 to $300 a month and get that house paid off in 15 years as opposed to 30 years, and again, being able to build your portfolio long-term that way. I appreciate your time, guys, and remember, with Delisle Properties, luxury always comes standard.